Hey y'all, Jen Hernandez, Loan with Jen. We are talking today about what is a home equity loan in Texas. Stay tuned. Okay, we're back. Texas, what is a home equity loan? What it is and what it isn't. So in the state of Texas, we have only been able to take equity out of our homes, out of the value of our homes since 1998. I remember it very clearly because I was a newbie loan officer in 1995, and it was just a few years later that I was witness to this amazing legislation. So Texas historically is a huge land homestead state. The landowners, Texas does not want you to lose your home, so they did not for a long time allow you to take out equity. So if you're coming from another state or just don't know, Texas is maxed at 80% of the value. That is because we don't want land values to change or appraised values to change and you lose potentially your home and have no equity in it. So we will not allow the equity to be taken out for more than up to 80%. So I'm going to tell you what that means. Again, we're talking about what is a home equity loan in Texas. We're going to talk about this definition again just a little bit more, and then I'm going to go through a quick calculation so that you can understand how much you can take out, okay? So home equity loans are only on primary residences. That is what I'm talking about. So there's three ways to take equity out of your home. There's three different ways. Number one is you could do a primary lien, a first loan refinance. So you might have an existing loan or you might own it free and clear, it doesn't matter, but it creates a new first lien on your property up to 80% of the appraised value. So let's say your house is worth $400,000, you could borrow up to $320,000, okay, minus any loans that are owed on the home. So if you owe $250,000, for example, you subtract $250,000 from the available $320,000, and that leaves you $70,000. From the $70,000 is deducted any closing costs from that, okay, or escrow setup if you choose to escrow. So whatever's left over is what you'll get 3 days after closing. There's a 3-day cooling off period. You sign the papers at closing, and then 3 business days later, you'll get a wire with the money, okay? So the second way to take equity out of your home is you already have a first loan. You don't want to touch that. It's got a fantastic interest rate, and you want to take out a second lien. So the first loan is in place, whatever interest rate you've got. Let's say you've got 3% on it, who knows? Now the second lien is up to 80% as well. Keep in mind, lenders have the right to limit that. Right now I'm making this video during COVID, and there are limits. Most lenders are limited to 70%, but the law allows up to 80%, okay, subject to lenders making their own rules. So that means that you've got let's say you have that first lien for $250,000 in our other example. The house is worth $400,000. You can take up to $70,000 out as the second lien, minus whatever closing costs are associated with that, okay? So second liens, it can be either a fixed 20 or 15 year. Most as a second lien do not do a 30 year. It'll be a 15 or a 20 year amortization, so watch out on the payment on that. No prepayment penalty at all. And then as a secondary way that you can do that, the third way you can take equity out is a home equity line of credit. So it's called a HELOC for short, home equity line of credit. And it's a variable rate. It's not fixed, it's interest only. It can go up and down just like a line of credit. So you could take out that $70,000 loan, and you might not want to use it right away. You might want to just have it handy for a rainy day. You might have a $20,000 balance for a while, and then later want to buy something or kids to school or whatever you want to do with it. It doesn't matter. And then you literally will write yourself a check from it, and you'll use the money, and you're only paying interest as the interest accrues and as you use the money. Okay, so it's really it's a nice tool. Some clients don't like it because it is interest only. So as prime, the Fed changes the prime rate up and down, that rate will go up and down as well. Okay, so again, we're talking about what is a home equity loan in Texas. To repeat, there's three ways. First lien, refinance. Second lien, you can do it as a second lien as a fixed, or you can do it as a second lien as a home equity line of credit. So those are the three ways to take equity out. Now, a couple of things to be sure that you know that are important. Okay, again, we're talking about the Texas Finance Code. It's Article A6 in the Texas Finance Code is what home equity lending is. And one of the stipulations, of course, max 80%. Second is you cannot take out any equity more than once per 12 months. So once you take equity out, you cannot do it again for another 12 months. Now you can also only have one equity loan at a time. So let's say you take an equity loan out, let's say you do a HELOC and you take it out now. First, you can't do anything until July of next year. And we're making this video in July, so 1 year from now. And furthermore, you can't have two equity loans at the same time. You would have to refinance the current in order to take more equity out later on. Okay, so make sure you watch out for that. And again, max limits do apply to, well, there's conforming max limits in your area. In Texas, most areas are 510,400. There are some lenders that are lending in jumbo loans for lines of credit or equity loans, and they all have their own rules. Usually they're maxed at 70%, almost always. So you'd have to just check with specific lenders. But I hope this has given you enough for talking points and questions. If you're in Texas and you'd like an equity loan, call me. Would love to help you. Talk to you soon. Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.